RCL Foods, previously known as Rainbow Chicken Limited, that's where the RC and L come from. It merged up with Foodcorp, right? This is the business that was private equity owned. It's got General Foods in there, Nola and a bunch of other brands. It's the market leader in the South African chicken industry. It has all of those chicken coops all over the country, in addition to all of the ancillary businesses that go into feeding the chickens, raising the hatchlings, all the rest of it. The whole group, RCL that is, with its 10 billion market cap, is controlled by the Remgro group. And they effected that by pushing more money into it with a rights issue recently to pay for the Foodcorp acquisition. Put all of that lot together, you've got a price to earnings ratio of 43, which seems high, but remember that's because the scale of the business has expanded, more shares in issue, and it hasn't yet had the full benefit of the years of the Foodcorp acquisition and the trading and the profits from that. Currently paying no dividends, but again, that's probably a transitional issue. So Gary, this is a business that's got one half that's in some pressure because of the chicken and the Brazilian imports and all of that, and then the other half, which is sort of a food producer, that bit looks quite good. Put it all together, how are you feeling about the net composite?
The net composite, yeah, I'm feeling pretty positive about Rainbow overall, because I mean, looking at it, I mean, with the Foodcorp acquisition, obviously, they have raised, a massive amount. That PE is very, very bloated at 43. I mean, some measures even higher than that. So, and that's specifically because the Foodcorp earnings only came through for 2 months. So that's going to re-rate completely in the next.
So they have reported results that had 2 months worth.
2 months worth of.
And now we'll have to see how that rolls forward.
Yeah. I mean, obviously, there's still going to be some risk around bedding down the Foodcorp, thing altogether. I mean, obviously they want to sell off some of their fishing businesses to Oceana, and I mean, there's the competition.
And what happened there? They were trying to bullet the fish business because they kind of had to. Somebody said they should, but then they blocked selling it to Oceana.
And then because they had 10% fishing rights that Oceana wanted, and that got blocked. So, and that's still a little bit up in the air because we still got the competition commission.
Who'd want a fishing business? Anyway, we'll leave that aside.
But overall, I mean, I think the Foodcorp acquisition is going to be very good. It's going to take out maybe some of this cyclical nature of the earnings, and specifically, I'm sure you've talked a lot about the poultry prices in the past, and Brazilian dumping, and going through EU and spikes in the EU imports, and Botox chickens.
It's a tricky story.
It's like there's a lot that goes on with the chicken business, but Foodcorp, making it more into sort of a Tiger Brands type thing, bringing in more stable sort of earners, I think is very, very positive.
Because some of the branded goods like the mayonnaises, the biscuits, the sandwiches, the pies, the bread, all of that stuff is quite, steady, and there's a branded element, which is a plus.
Yeah, which I think,
Plus, there's Vector Logistics in there as well, right? Which is the business that handles a lot of the distribution of chicken inter alia to all the fast food restaurants, and a whole lot of other stuff as well.
100%, and you stop being just the chicken producer, and you get that logistics and distribution quality as well. And then, of course, you've also got the Zambeef JV as well, which is going to be able to push them.
Yeah, just remind me of that. So that was where they bought the chicken part of the Zambeef business. So Zambeef is some kind of big Zambian business, and the chicken part these guys now have picked up in some sort of JV with
specifically looking at using it as a springboard into Africa. It is still a very small portion of earnings, but it's something that gives it a bit of flavor to move it.
So really what this is evolving into is a company that's more comparable to Pioneer or Tiger, which could be considered a food producer, which is a different and more favoured sector, not so much an agricultural producer.
You hopefully will see the PE re-rate high, well, not re-rate higher from there, but once that actually comes down, then it'll probably stabilise on a higher PE than Rainbow's traditionally traded on.
Because these kind of situations where businesses put themselves together and then have more shares in issue and only have a report for a period, and then you can't really compare the historics with, those are opportunities really, because often it takes a while before people can really work out what the scale of earnings is, what to compare them with, that kind of thing. And so if you get in early, you can do well.
And I think you can see the price volatility on that, and that's just the market trying to discover where the fair value of the company is as it digs through all the changes that are going through the business.
So I'm getting a sense we're leaning towards hot on this one.
Yeah, I like it. I mean, we've got actually 2 analysts that cover it in detail, and I mean they both like it at the moment. So I'm going to trust them. I'm going to put my money behind it.
Excellent.